Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. In this episode, we speak with Michael Hurup Andersen, founder and co-CEO of kompasbank, an end-to-end digital business bank established in 2017 to improve access to financing and advisory services for small and mid-sized enterprises in Denmark. The bank offers tailored loans, leasing options, and a digital marketplace of operational tools, along with savings products for individuals whose deposits help fund SME growth across the country. Michael has spent more than 2 decades in banking and financial services, with prior roles in treasury, corporate financial sales, and advisory work across Danish and international institutions. At kompasbank, he oversees efforts to build a technology-driven platform designed to support companies with faster processes, clearer guidance, and more flexible financing. I am your host, RJ Lumba. We hope you enjoyed the show. If you like the episode, click to follow. Michael, thank you for taking the time. Good to be with you.
Thank you for having me, RJ.
Looks beautiful in your background, actually. Where are you joining us from?
I'm joining you from Copenhagen, where it's actually quite snowy at the moment. We have a white grass underneath us, and it's getting to be a little bit Scandinavian cold at this time of year.
And are you from Scandinavia?
Yeah, I'm from Denmark. I'm dialing in from Copenhagen, and that's where we've been launching our business ever since we started a couple of years ago. So still doing strong.
It's a great business. So we cover fintech primarily in the US, but increasingly from Europe as well, because there's a lot of activity from Europe. We actually had recently on Cred. Are they in your space as well?
Cred is doing phenomenally. We don't come across them as competitors a lot, but we are in the same vicinity, as we say, in terms of SMEs and in terms of credit. But we are targeting different customer groups and also different lending sizes. And we are on different paths of the curve, but they're doing a great job for building a great portfolio. So we'll have to wait and see. But we haven't yet come across them in the same sort of customer space, not yet.
Okay. We'd love to understand the gap in the market that you're addressing and maybe what didn't exist before, because you're addressing this SME market, as I understand, 10 to 250 employees across, several sectors. When you started this company, I think around 21, 22, what did you notice that was missing?
So I started the company already back in 2018, but then we spent a couple of years getting the actual bank license. So we actually started from reverse. Most people start with customers and maybe a small payment license or something like that. We started from doing heavy lifting from day one. So we went for the bank license. And then you're absolutely right. We started to conduct business from late 21. Actually, mostly we say 1st of January 22 was the cutoff date that we actually started doing sort of real customer business.
Mm-hmm.
And the thing that was missing is something that I believe has been the case for a long time, not just in Denmark, but really across many jurisdictions and geographies, that the SME space is very overlooked and very neglected, not because the banks don't want to or because they don't like it, not necessarily. I mean, everybody loves local businesses that creates a ton of jobs, a ton of innovation, a lot of local community value is being added. But the problem, which is, I think, is both a reasonable and fair assessment from the incumbent banks, was we can't group SMEs together like we can retail. So the risk modeling is different. The pricing is different. We can't make enough money on everyone so that we will service them the way we do large corporates, where we can allocate a team, we can allocate risk parameters, we can allocate product innovation, we can allocate these things. That's not really possible for an SME, where their earnings per customer cannot justify those types of investments. And when you can't group it together like you can in retail, then you're kind of stuck with, should I then do it? Because the economics are difficult. And I actually think that's a very valid and reasonable question. And most incumbent banks, not just in Denmark and Scandinavia, but actually across Europe and in fact in the United States, have actually come to the conclusion that, yeah, we'll service them if it's very easy or it's very simple and the requirements are not too big.
Mm-hmm.
That's where we thought, well, actually, if we can create a way to service these customers in a way that they feel is appropriate, with the feel like it's an iPhone or the feel like it's, a new technology, then you'd probably be able to price yourself accordingly. And then you would have your way through. You have a go-to-market that actually resonates with customers. And that's why we started with the customer to find out what do they need. And then we were sort of calculating back from there until we figured out, okay, in order to give them what they want, which is a combination of digital online self-service, but also from time to time, the ability to meet with a physical human being so that we get a real conversation, because some of the stuff that they're doing is a big investment for them. Like taking out a loan of 1 million euros, 2 million euros, that's a big ticket item for an SME. So sometimes they need that comfortness. But in order for us to be able to afford that and not get caught in the same trap as all the incumbents, we needed to go all the way back and start with first principles around how do we build a bank that has such high compliance and quality and security and performance, but at the same time so cheap and so fast that we can afford to invest what we need to be able to differentiate ourselves towards the customer. Mm-hmm. So we started from the customer and calculated all the way back, and then we need to start from scratch. That's a long explanation. I'm sorry about that, but that's how it started.
I imagine the user experience has to be extremely simple and easy for some of these target customers. Say if you have a founder or owner of a manufacturing business, what's the first kind of approach to them? How do you get them started using your services? Is it a simple deposit account? Is it a loan?
So it's actually divided around 80-20. So 20% is inbound. So they somehow heard of us and they reach out themselves to either open an account or get some form of a credit or financing, overdraft facilities, payment services, foreign exchange, leasing, whatever it is that they reach out for. The other 80%, we actually engage them through our own application. We build an AI-driven lead generator, which basically scans every company in Denmark on a daily basis. And then it creates a funnel where we adjust the appropriate companies according to different metrics. And then in the end, we come out with what we call high probability customers, which means, we have a high conviction that if we reach out to these people, they will be in need of our services. And there is a high probability that we can close one or more deals. And the way to do that with a high conviction, with a high probability of closing, is that we need to make sure that the filtering process is done in a very systematic and very repeatable way so that we don't just hit it right once, but we continue to produce that pipeline of potential customers through AI applications that we can then reach out to and give them the service that we actually think they deserve and that what they're looking for. So that's the two approaches. So inbound and outbound. The outbound is very driven by our own AI application and screening process. And then it's a matter of understanding and listening to that customer and what exactly is it that you're trying to achieve in the next, 12 to 24 months. And would there be somehow we can help you achieve your goals? I think that, again, is a different approach than you would see most other banks. Most other incumbent banks are very reactive. So they wait for the customer to engage with them. And then from there, they would then provide them with a good and reasonable service. It might be slow, and it may also be a little bit expensive from time to time, but it would not be a bad service. It would be a fine and perfectly acceptable. It's just not to the level that some of these SMEs expect, because we are living in a time where time is money. And if you don't get your stuff sorted out fairly quickly, you may run into competitive issues. So we actually think ourselves as being a growth enabler, as someone who can help European SMEs regain or maintain their competitive edge, which many of them are at a constant fear of losing. I mean, why wouldn't you? I mean, you should always be alert on that stuff, right?
So you're offering a better experience. It sounds like you're providing some maybe thought leadership around what this business could do by using your financial services. Do you also compete on price because you have a lower cost structure? You can then extend maybe lower rates to your customers?
Yeah, we might in theory be able to do that. In reality, we don't from a lending perspective, and I'll explain why. We think from a broad-based perspective that some of these SMEs they are mismanaged because the banks are seeing different business cycles. I'm sorry if this goes a little bit technical, but I'm trying to give you the explanation why the pricing structure is what it is. So SMEs run in cycles like, the economy in general. And when you have what we call through the cycle risk, that means the low end of the cycle, obviously defaults and losses will increase.
Mm-hmm.
And in order to pay for that, you need to have a price in the good times that will make up for those losses.
Mm-hmm.
What we are seeing from time to time, and it's a very common issue across many jurisdictions, is that the banks will price the SMEs lower in good times. That means taking too much risk at a too low price, in my opinion. But then in the bad times, they will pull the funding.
Mm.
And that means that you're basically selling an umbrella that you need back when it starts to rain, which that's not really cool when you're an SME. You kind of need it at that point. So what we are trying to achieve is to say, look, what we will promise you as Compass Bank, we promise you that we will be there when it rains and when it shines.
Mm.
And in order to do that, we need to make a viable economic business. That means that when some of the others are, in our opinion, mispricing customers a little bit in good times and super overpricing them in bad times, we like to keep a little bit more steady state so they know that there's a higher visibility, there's a higher predictability. And that is what we're trying to achieve. So in fact, yes, in theory, you are right. We could lower our prices to match the margins that others have. But in fact, we have a higher margin, but same or lower risk, because we tend to look at it from a more holistic perspective that we need to be able to support these customers also when times are tough.
Mm-hmm.
From a business perspective, I mean, we're responsible to our shareholders and to the community and to regulators. We need to make sure that we do this correctly, right? So this balance is difficult. And then when it comes to payments and foreign exchange, yeah, our technology enables us to price much lower. And for those products, we do.
Would love to hear a little bit about your background. We established you're from Denmark. Where did you go from there? And then I believe you had kind of a career in consulting.
I did. So yeah, I'm from Denmark and I took all my educations in Denmark, with a few universities in the US to support. But yeah, I started my career in Denmark in investment banking. And then I moved to London, where I spent a couple of years working in various consulting roles, including in 2014, 15, 16, 17, where the whole fintech phenomenon kind of exploded. I mean, everybody was like, oh, wow, what is this? What's Revolut? What's Monzo? What's Atom Bank? What's N26? What's Nubank? All these things happened at that time. And I was pretty involved with that in terms of from everything from technical platforms to bank license to balance sheet and product, all that stuff. So that's actually how I came across this next phase of financial services that I thought was deeply fascinating. And I really, really liked the notion that there was a combination where you could see fairly simple products, right? I mean, when some of these companies started out, they had nothing more than a fancy card with a different color, but it really didn't have a lot of features or a lot of value. But the customers really took it to heart. They really liked it. And I remember quite frequently when I was working with large incumbent banks, and some of the bankers were, I wouldn't say mocking it, but they were saying, we don't understand what the fuss is about. Because their card can't, I mean, they don't even have credit. We can do credit and debit. We can put your name on it. We can do different things. And these other players just came along and really didn't have all those things. They just had a cool color. But the combination of having an incumbent industry that couldn't quite get or wrap their heads around why customers were flocking to a different solution that on the surface seemed worse. But once you start digging down to the real value, it was about brand, it was about belonging, it was about understanding that, you're breaking away not just from the incumbent banks, but maybe from your parents' bank, maybe from what you've been told your entire life. So you were creating your own identity. And I think that was part, just my 5 cents here, that was really part of what created the way for enormous successes like Monzo or Revolut or Nubank. That was that feeling of moving away from something different. And when I saw that combination, I actually thought, look, that's got to spill over into SMEs at some point.
Mm-hmm.
And given the fact that nobody is looking at it, right? I was spending a lot of time in London for many years, and I can't recall I had a single engagement or a single focus on SMEs. It was always super large corporates or some retail stuff.
Mhm.
So my point was, Europe is lagging behind competitiveness. I think we can all see that. We're not really doing anything meaningful to solve it.
Mhm.
And the banks who are in a position to leverage their power multiple times in order to provide capital and growth assistance and a lot of knowledge to these people, it's just not happening.
Mhm.
So I figured, okay, that seems like a hole in the market.
Mhm.
And it was.
And I believe you've raised some capital. Are these investors that you have, are they from also the Nordic region?
Yeah, we're very fortunate to have raised capital from our investors. We're very grateful for that. They're super supportive, quite bright people. And they are, I'm happy to say, from pretty much all over the world. I would say a majority is from Scandinavia,
Mhm.
but we do have, all the way down the European corridor from Germany, Holland, Spain, France, etc., all the way over to England. We do have in Asia, we have the United States. So we actually do have an investor base that is fairly broad, which actually makes investor calls on video quite tricky because you're needing 3 or 4 time zones to somehow. So that can sometimes be a little tricky that people have to get up, either 6 a.m. or staying up till after midnight to be on an investor call to accommodate, but big problems.
Yeah. Can you give us a sense for the scale of the business currently? And you can use whatever metrics you're comfortable with.
Yeah, so I think we're very likely, given where we are at the moment, we will probably double our customer intake this year. The core business is profitable. That means our lending business is profitable. Of course, something that we're both happy and proud of. It's not that simple to build a neobank from scratch and then moving it all the way to profitability in the time frame we're trying to do it in.
Mhm.
So we're happy about that. The business as a whole is still burning a little bit of money because we made some major investments into payments and other new products, which we are actually launching as we speak. I mean, I think we are piloting our first customers right now. So I have very high hopes for that in the next weeks and months. And the size of the business, we are 60, 65 people at the moment, plus some part-time employees. So headcount is probably total around 80. I'm pretty confident that we're in a good place. We're moving in the right direction, but every day still kind of feels like day one, right?
Right. Last 2 questions. One is, can you tell us about a person who's had a profound influence on you?
Well, that's a good question. I have been fairly influenced by the thinking of, it doesn't mean that I agree on everything they do and say, but a combination of Nassim Taleb and, of course, right now it's difficult not to mention Elon Musk with what he's doing, but also even my old bosses when I was at Saxo Bank, Kim and Lars, which were building a bank themselves from scratch, has been quite influential on how my thinking is in terms of how do I approach risk and how do I approach revenue and customers. So I would probably say that. But the most influence that I've had in my life and in towards what I'm doing is by far my parents, my mom and my dad.
Mhm.
By far the most influence and has been extremely supportive. Even though I remember my mom said, when I said I was starting this, she said, "Are you quitting a well-paid job in London to go back and start something from that? Are you sure about that?" I said, "Yeah, I am." And after that initial question, I have to say my mom and my dad has been extraordinarily supportive, followed closely by my wife and my sister. So very happy about that.
Last question. Can you tell us what you like to do outside of work?
Well, outside work, I got to say, look, I don't do anything but work. And then my wife and my kids, that's pretty much it.
Right.
Any minute I can provide to my wife with, to make up for the lack of visibility in day to day is probably where I try to invest. But
Right.
I'm not totally convinced that I'm getting it right, though. Work-life balance doesn't really exist.
Yeah. Michael, thank you again for taking the time. It's been a great conversation.
Cool, okay. Really appreciate you taking me.